Hi everybody, Harris from Indicator Vault here, and today I will show you how to effectively trade hidden divergences with our Hidden Divergence Pro indicator. Just like our divergence dashboard, which is used to trade on regular divergences, the Hidden Divergence Pro indicator is a great way to automate your trading so you don't have to do the hard work of finding hidden divergences across multiple currency pairs and timeframes. So let's see what a hidden divergence is. A hidden divergence forms when the oscillator makes a higher high or lower low while the price action does not. So this often tends to form during consolidations or corrections within an existing trend and usually indicates that there is still power in the prevailing trend and that the trend will continue. So in other words, hidden divergence is similar to a continuation pattern. As with regular divergence, hidden divergence can be bullish and bearish. So in the case of a bearish hidden divergence, it forms during a downtrend when the oscillator makes a higher high while the price action does not, and it remains in a consolidation phase. So this indicates that the selling has not vanished and that the downtrend has still power. The correction happened because of profit taking rather than the emergence of strong buying power and is therefore likely to be short-lived. As a result, the downtrend is expected to continue. Here on the right side of the picture you can see a hidden bullish divergence, which forms during a correction in an uptrend when the oscillator makes a lower low while the price action does not. So this indicates that there is still power in the uptrend and that the correction is merely profit taking rather than the emergence of strong selling and is therefore unlikely to last for a longer period of time. Therefore, the uptrend is expected to continue. And we will see how to trade on the hidden divergence with our Hidden Divergence Pro indicator once we switch to our trading desk. Alright guys, so welcome to the trading desk. And the first thing you need to do is to install the Hidden Divergence Pro indicator. And to do so, you need to move the file to your MetaTrader 4 data folder. So go to File and select Open Data folder. After that, open MQL4 and the Indicators folder. So you need to move the indicator file inside this folder. After that, restart your platform and you will find your indicator in your navigator window under the indicators list. After that, simply drag and drop the indicator to your chart and click OK. And the indicator will show up below the chart window. So in this case, we apply the indicator to the US dollar Canadian dollar currency pair on the 4-hour time frame. And as you can see, we can immediately spot a hidden divergence, which is shown by the indicator and on the price itself. So in this case, you have a bullish hidden divergence, which means that the price made a higher low while the indicator failed to make a higher low and made a lower low instead. So once you see this blue arrow, you can enter with a long position. And I would suggest placing a stop loss around the previous major swing low. So if you would enter with the close of this green candlestick, then you could place your stop loss around here. So this is our major swing low previously. And as you can see, the price made a significant up move after we entered with a long position. And you would make a profit of around 270 pips in this chart here. So let's scroll to see some other examples, and we can immediately spot another example here. Again, we have a bullish hidden divergence, which is shown both on the chart and on the indicator itself. And the price made again a higher low, while the indicator made a lower low. So they diverge from each other, showing a hidden divergence. Again, we would enter with a long position once we spot this blue arrow and place our stop loss at the recent swing low, which could be here. So again, in this example, this trade would be a profitable trade, and we would make a profit of around 400 pips if we measure the trade from this entry point to this exit point. So let's scroll further to see if there are additional signals to trade. And again, we can see here a hidden bullish divergence. Again, enter with a long position once this blue arrow forms, and place your stop loss just below the recent swing low, which is here. This is again a profitable trade, signaled by our hidden divergence pro indicator, and it would make us around 430 pips over the course of the following days. Alright, so here we have a bearish hidden divergence, which is shown by the red line and the red arrow, while bullish hidden divergences are shown by blue lines and blue arrows. As you can see, the price made a lower high while the indicator made a higher high, and this is a characteristic of a hidden bearish divergence. So we could enter with a short position here and place our stop loss order just above the recent swing high, which is located here. And as you can see, the downtrend continued the following days, and you could easily make around 450 pips on this trade. So the exact time to exit your short position can be determined in a number of ways. For example, you can place a trailing stop just above the recent swing high and wait for your trailing stop to be executed to exit the trade. This way you can stay inside the trend as long as possible until your trailing stop gets executed. Another way to exit your trade would be to look for signs that the downtrend is losing power. So, for example, you can look for a new higher low, which is a characteristic of an uptrend, to exit your trade. In this case, you can see that the price made lower lows and lower highs all the way down, but at this point the price actually made a higher high, which is a characteristic of an uptrend. And this would be your first sign that the downtrend may not continue, but as our indicator signaled a bearish divergence, the downtrend had enough power to continue, and you could exit trade with a hefty profit. Alright, so let's zoom into a lower time frame to see how the signals on a lower time frame look like. And on the 1 hour time frame on the US dollar Canadian dollar pair, we can immediately spot a bullish hidden divergence, which is charted by our hidden Divergence Pro indicator. As you can see, the price made a higher low, and it happened actually 2 times in a row. Here's our second signal. The price made again a higher low, while the indicator made a lower low. So these are 2 examples of bullish hidden divergences, and we would enter with a buy position once this blue arrow appears, which is at this place and at this place. So in this case, we would place our stop loss order just below the recent swing low, which is located here, and as you can see, it would make for a profitable trade because the prevailing uptrend continued for a long period after we entered our trade. So we would actually make around 200 pips on this trade. Again, you can place a trailing stop just below the recent swing low and remain inside the trade for as long as your trailing stop remains active. Or you can look for signs that the prevailing uptrend is losing power, which is around here. As you can see, the price made a lower low, and this is a first sign that the uptrend may not continue and we could exit our trades at this point. So thanks for watching. This was an introduction to our Hidden Divergence Pro indicator, which automatically detects the hidden divergences across all time frames and all currency pairs. So you just have to look for the blue arrows in case of a bullish hidden divergence, and for the red arrows which are pointing down in the case of a bearish hidden divergence. And you can make profitable trading decisions based on that. Thanks for watching, and see you in one of our next videos.